What are the sectors that you should be watching right now? The stock market, the S&P 500, is in a very, very critical place right now. You have a declining trend line that goes all the way back to the January highs. Price is sitting right on that declining trend line. If it can break above it, you have an opportunity for a huge breakout in the overall market. But which sectors are setting up the best to be able to benefit from that? Because when you have a bull market rally, not all the sectors necessarily will participate in it. For instance, when you're in a good, strong, bullish market, it tends to be more of your technology stocks, it tends to be more of your discretionary stocks, and then you have your safer sectors, which tends to catch a bid when the market's declining, more so at least than your growth sectors, like utilities, like staples. Those are your safe sectors. Those are the ones that are not going to perform as strong as more of your growth areas like technology, industrials, financials. So what I want to do in this video here is I want to go through all of the different sectors. There's 11 of them in total that we're going to go through and just try to really see for ourselves which sector is setting up, not even just one sector, it's actually multiple sectors that it can be, are setting up to benefit from this market breakout if we indeed get one. So let's go ahead and go right to the charts. But first, before I do that, make sure to click join button down below. You can get all of my stock market videos that I provide each and every day, multiple ones for my YouTube members. So click the join button down below. You're going to get videos on the FANG stocks. That's going to include all of your big tech stocks and Tesla and Nvidia, Microsoft, Google, Netflix, Amazon, Apple, Meta. Then you're also going to get updates throughout the week on the stock market as a whole. It's really cool. It's really helpful to be a part of this. Plus all sorts of different trading ideas that I come up with throughout the week. So click join the button down below to be able to do that. So let's go ahead and get right to these charts here. First up, XLY. XLY is the ETF for discretionary. When we zoom in on this one too, we have a peak here in August, but does that mean it's necessarily turning around? Not quite yet, but it's starting to break through this massive declining trend line. Now, what it has to do from this point is deal with some of this resistance here that it's been dealing with, I would say, over the past 4 months or so. This goes all the way back to October. It's trying to push above it right now. It's slightly above it, in fact, but it needs to be able to stay above it and stay above this declining trend line. So there's some opportunity there, but I think you got to be really concerned with some of this choppiness that might be existing on XLY here that goes back to October. Next one, let's look at the financials. Financials, zoom out a little bit further on this one, and you're going to see this massive inverse head and shoulders pattern. So you got this left shoulder, and you got this head right there, and then you got the right shoulder. And then in all of that, you have this big time resistance level, or what we would call a neckline. So neckline, head and shoulders pattern, but it's got to get back above it. And one of the things that you're also going to see here too down below is there's some pretty decent volume that's been picking up here in financials of late. That's largely due to the fact that they're in the middle of their earnings season right now. So there's going to be a lot bigger dramatic moves that take place in the financials right now. So those are the financials. Then we got staples. Now staples, you could say maybe you got that inverted or inverse head and shoulders pattern that's trying to form. I wouldn't quite go that far just yet. But the staples is kind of a difficult one to figure out because it just looks like it's been trading sideways for over a year. Yes, it's had its ups and it's had its downs like what we saw in October. But overall, it's not really done too much. And that's what I mean by being in a safe sector. People like to go to staples because those are your stocks that people have to have regardless if we're in a recession or not. Kind of like Waste Management, for instance, WM. People still have to have their trash picked up, right? So they're not as likely to be affected by a recession as, say, Apple or Amazon or some of your other more growth discretionary type plays. But what I do see popping up, and this could be a sign that maybe we are getting ready to get into a big bull market rally here, but you have an inverted head or cup and handle pattern here. So you have the cup and then you have the handle. So where does it confirm at? It confirms right below this 200-day moving average, so that if it gets to around 73, 75, it would be confirming that pattern. This is the cup again, this is the handle. Watch that pattern. Then we have healthcare, XLV. And this one again, a lot of sideways price action. It hasn't been hurt as bad because a lot of your healthcare stocks did go up over the past year. You take stock like UNH, guess what? That one has done really well. It wasn't nearly affected by the 2022 sell-off like a lot of other stocks were. So this one's holding up pretty good. You got maybe this consolidation that could break out to the upside, but I don't see a clear edge in it. I mean, a little bit of a declining channel there on somewhat average volume down here. Possible, but I just don't see that there's a real clean edge with that particular one. But communications actually does have an edge. It is up 11 days in a row, which gives me a little bit of hesitancy when I'm buying a stock after it's been up 11 days in a row, because the odds are it's probably going to have a pullback here in the coming days. But look at this basing pattern on communications. I mean, this is a really, really nice basing pattern that has come about, and it's sitting right below the confirmation level. So what I would like to see personally is see a little bit more consolidation. I think there's probably the best reward risk ratio in communications right now versus the other sectors. What is in communications? Well, you got stocks like Netflix and you got stocks like Google. They're in communications. So if they're setting up, and Netflix has done really good of late, this thing could really pop pretty well. And I would say there's some resistance moving forward at around 56 that you want to be cognizant of, maybe closer to 57. Then there's technology. This is the one that everybody likes to talk about. A lot of people like to trade in. You got a declining trend line, and this declining trend line has not broken. I mean, this is a pretty solid declining trend line, very similar to one that we're seeing in the S&P 500. It's got to break through it, and it's a long ways from doing that. So it's still in a downtrend. Now, it may be forming a higher low here. That's a positive. That's a good thing. So we can start to draw that trend line. But if it breaks that, man, all bets are off. XLE, and one that a lot of people have traded throughout 2022 because there were some pretty good solid gains for 2022 in energy. You can see where it started right around here in the 58s. It's trading at 89. So really, that was pretty much the big bright spot in the market for all of 2022. So here we are. XLE, it's got some resistance overhead. It needs to break through that. That's going to be a challenge for the sector. But it's also got this base that it's breaking out of too in the near term. So that's one thing that it's got going for it. But is the reward risk ratio that good? Is it like communications? No, because you got some heavy resistance that it's seen previous rejections at 94. So it may go up about 4 or 5%, and then it's going to hit some resistance. And then to the downside, you got more than 4 or 5% to the downside there. If you're looking to put a stop loss below the lows from January, if you're a little bit more conservative, you could put it below the lows from January 10th. Moving on, we got industrials. Remember, there's 11 sectors here, so we're almost done with all of them here. But if you look at industrials, you may have a double bottom here that's formed, but I wouldn't necessarily say this was a massive decline either. So it's definitely one of the more interesting charts. You could play along with the idea that there's some resistance right here that XLI is playing with and that it needs to get through. I'm not sure if it's going to be able to break through that level or not before having to consolidate some first, but we'll see. XLU, this is your utilities like SO, like NEE, a lot of your power companies. Double top right here, that tends to be a little bit bearish, but it hasn't really played out hard to the downside. We had a big decline here from September and October, but it's bounced back pretty good. This is another one, safety play. It's trading pretty much just sideways. It's in the middle of that range. Not a clear edge at all with that one. XLRE, you have a cup and handle pattern somewhat. I would have liked the cup and handle pattern if it would have just confirmed here with the cup and then the handle, but then you get this dip down. Maybe some people would say that's the handle. I'm not sure what we're looking at there with XLRE, but you do have some resistance that you want to be mindful of right there. If it can get back above the $40 mark, about 40.15, let's be exact, then it has a challenge at the 200-day moving average. Why that's significant is because the last time it tested it back in August, it struggled to break through it, and it saw a sharp price rejection that took the ETF from 45 all the way down to the low 30s. And we'll wrap it up with materials. Materials, very similar to financials, that inverse head and shoulders pattern. Materials also has a very similar pattern just like that. So left shoulder, head. In fact, I'll just draw circles for the troughs of these. That's your left shoulder. Then you got your head. And then you got your right shoulder right here. So left shoulder, head, right shoulder. Confirms at around this 85.15 mark. Can it get up to there? It's already made a big time move of nearly 10%. So Perhaps it needs to take a breather as well. It's up 6 days in a row. That's a lot. Let's see what happens. Ideally, if it can consolidate some, that would make more sense. Now, remember, with the overall market, we're sitting at some pretty extreme levels. You take a stochastics right down here, 96, 97 on the stochastics. The Qs, not much different. You're sitting at 98. And then with IWM, you're sitting at 99. Those are extreme readings. And so when we're getting into trades this week, we need to be cautious about the fact that even if the market's going to continue to go higher here, there's going to be a little bit of struggle until it can work off some of those oversold or overbought conditions. It's very overbought. I sometimes will accidentally say oversold when I mean overbought, so if I did that in this video, my apologies. But overall, nonetheless, keep in mind reward risk ratio. What do I like out of all the sectors the most? I think the communications has a lot of potential to it there. I think that nice base that's at the lows, it's very nice and clean, but it needs to consolidate some, needs to work off those overbought conditions, because like we said, it's up 11 days in a row, so you don't really know how high that thing can really go before it finally starts to pull back some. So that's what we want. And then technology, yes, those are always tempting, but it's still in a downtrend. It needs to break through that downtrend to really entice traders. And then financials, that's going to be largely contingent on how the rest of earnings season goes for it, with some of the regional banks that will start reporting, and with Goldman Sachs earnings coming out as well. And we manage the risk. We try to do our best to put ourselves in the right positions that aligns ourselves with the overall market direction, the sectors and the industries, and then we get into stocks that goes in the same direction as all those other three variables. So if you enjoyed this video, encourage you to like and subscribe. Hit that bell button as well so you can get the notifications of when I do a new video. And tell me down in the comments, man, what do you guys like in terms of sectors? What is your focus going to be right now? Thank you guys, and God bless.